There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome to the weekend software special, I'll call it this weekend. Today is the 2nd of April. Yes, yesterday was April 1st. I actually walked in yesterday into my partner's office and made up a big story about us losing our contracting. He actually fell for it, so my April Fool's joke for the week. In any case, my name is Steve Vetterl. I am Auvoria Prime CMA. Try to be the risk manager. Can't always be that guy. Sometimes I'm wrong. Oftentimes you are far better off in risk management when you look at things from an angle of being wrong. Okay, guys, hear me talk about this. Quite frankly, it sounds like a broken record in many cases. But as always, follow me on Telegram, where I'm about to post the following piece. And this is actually a pretty decent piece. So between, as much as I hate the investment management side of Credit Suisse and Morgan Stanley, they both rise to pretty much the top when it comes to just general institutional research on the street. We get our hands on a lot of pieces from both organizations. This is a piece that was actually brought to me by actually a big builder at Auvoria who's really been quite helpful in helping me sort of sift through the maze of crap that is out there. And I would encourage you guys, if for some reason I'm not coming across, since I just downloaded new OBS software, hit me up on Telegram if things aren't looking right, or you can't see the screen, or you can't hear me okay, or whatever. So doing a quick and dirty version of this, but I'll tell you, this is actually a really good piece. I mean, for many of you, you don't have to know this stuff. I mean, but the whole idea behind being a great racing driver is I use many F1 analogies. And for the F1 fans out there, season I think 4 of F1's on Netflix. It's freaking killer. The competition level in this sport, in my opinion, is the highest in the entire planet. So it's best to pull from where the most competition and also the most money is spent by these teams. And the analogies of the markets and money is really the analogy of, wouldn't you want to know how well the tires operate in both cold and wet track conditions, as well as warm, right? Before you start ripping the car around into whatever turn trying to get around the track, right? So it's kind of the same thing with trading, in my opinion. You really should understand the core basics of the markets, right? And I tell you, it was really cool, not to tout the horn of Governor DeSantis, who's a tremendously loved individual across this country. He has actually instituted a course in Florida. All high school kids have to have a finance course class done. And it's actually pretty slick. And quite frankly, I wish I had some extra time because I'd love to be on the governor's council for finance class and how the curriculum and syllabus should be structured. Because I tell you, I would start with money, commodities, and the core of finance, right? And spend as much time, obviously, on the investment company acts that sort of shaped the framework of the Federal Reserve back in the 20s, 30s, and 40s. But I think it's important to understand that many of those laws came into place as far as the United States and many other countries that put central banks in place to monitor the money system, to monitor banks, including the Treasury, and to monitor um, commodities. As you may not be familiar with Bretton Woods the third, it's essentially just taking us off the gold standards. It's sort of like this apocalyptic event, if you will, that took place in the 70s that removed this country from the gold standard, and many other countries followed in some sort of fashion. But as you go through this piece, I thought it was interesting here. I don't know if you can necessarily see this, but it just says foreign exchange is the price of foreign money, the price of the US dollar versus other currencies, which can be floating or fixed, right? Think of the Chinese fixed or pegged to the dollar, right? Or managed in between. So fixed exchange rates broke in several countries in Southeast Asia in 1997. Had the IMF not stepped in, that's the International Monetary Fund that Christine Lagarde used to head up, we would have had a banking crisis in New York, right? Probably everywhere else at the time. Japan was big, so forth. So you can go through and read the piece. I'll actually post. It's a pretty decent piece. It's pretty deep, but use it at least from a top starting level of education and understanding. All right, let's go into the usual boring stuff, right? Okay, Forex factory calendar. Always make sure you're looking at the week forward here on Saturday. And let's take a look at the week. We can filter out the events. Just apply the filter. So tomorrow, it's Chinese holiday, right? Yeah, Chinese banks will be in observance of Tomb Sweeping Day. Or maybe they'll be closed in observance of the ripping off of property rights. Any case, it's an event. So on Monday, Governor Bailey speaks. RBA statement on Tuesday to be pretty important there. I think the only one that truly carries any weight is the FOMC meeting at 2 p.m. We've already raised interest rates. Probably be a surprise to the marketplace if we raised again. The market is currently pricing in, and this is certainly up for argument, another 50 basis points here in the US to curb inflation and for a whole host of other bubbleliciousness bubbles that are building across many different asset classes. So keep that in mind. I would not be trading around 2 p.m. And do note this cast is coming to you guys today, Eastern time. So you're looking at a little like about 18 after 1 o'clock here. I keep saying I'm going to move these casts down to 10 a.m., but I haven't done it yet. So maybe it's just my own laziness of switching the time, because it would be a big shift. Got a lot of subscribers. In any case, I think that's it for Forex Factory. Let's jump over to the futures charts here. As you can see, rebound in equities, we're looking at daily charts. Each candle represents a single day. Rally, whether it's not, it's a dead cat bounce. I don't know. We had enough of a rug pull, not Friday afternoon, but late Thursday afternoon, which is sometimes commonplace towards the end of the week, on a dead cat bounce. Essentially, that's where you have a huge sell-off and some sort of break, and then the markets sell off into, or anything sells off into a particular zone of support, and then rips back up to the scene of the crime, if you will, and then just, it's almost like tag, you're it, and then it just goes back down and crashes through the low. It's called a dead cat bounce. Can't be 100% sure that's going to happen in equities, only because I'm always looking for what's called a max pain trade, meaning that what would be the biggest surprise to the marketplace? What boat is weighed heavily towards, the bow, the stern, in terms of the weight, and right now I think it's the shorts thinking we're in a dead cat bounce, and a lot of institutions are overloaded in the shorts. So the max pain, in my opinion, would be if the markets went up to make new highs and just barbecued that group on the way up, essentially catching many off guard. I see that happening. Which case, if you're ridiculously overweighted in equities and or have gotten completely clobbered and you're getting some of your action back, especially in tech, I would highly suggest taking some off the table. Even if you have a long time frame. All right. Now, as I've been elaborating on over the last, I don't know, 2 months, sell off in the fixed market got a little bit of a reprieve, and now we're back down to not necessarily in the 10-year, but certainly in the 2-year, and that's that the yield curve concern that's been expressed a lot in the marketplace. So not going to get too much into that. I did want to note, at least from the dollar perspective, we're in a real tight and fairly well-defined zone, which I'm going to show you on a bigger chart. But I want you to see the correlations between the zone we've built up here and the zone, with the exception of the yen. Most other currencies in the major categories have built the lower zones, or we've built an upper zone, and they look similar, not necessarily perfectly, at least the three big ones. Whereas if you're looking at, Aussie, CAD, and NZD, they've all rallied a lot, at least in relation to the U.S. dollar. So let's take a closer look at. Actually, I had already addressed the energy space. Yeah, we already did that. Take a quick peek again. Notice gold sold the rallies I'd mentioned a lot. Net gas prices heading up. That stinks. Looks like we're flagging on these oil charts, at least from a daily perspective. Max pain trade on anything energy is lower. So I think a lot of people got wicked leverage. We're going to stay high. And now they're concerned here that we're going to touch some longer term trend lines and possibly break through it, in which case it's going to be mass liquidation energy. So just keep that in mind if you're overweight in it. Could be a complete fake out and could rip back up to the highs, right? I think there's too much action being taken. You never know, looking at the damn pumps. It's funny, you look at gas prices, we're not 130 a barrel, or depending on which one you look at, crude. I don't really look at Brent. Just look at it crude in terms of the WTI, right around 90.50 a barrel. But yet gas prices in many areas are still at the highs. It's the whole opportunity by the gas station enterprises to gouge us until prices start to come down. Depends on the area, though. As I was just getting ready to buy a gas guzzling V8. Let's see what else. Yeah, that's it for now. Let's take a closer look at DXY. Actually, let me get rid of all this stuff. It's easier to see. Here we go. So, daily chart. This is the upper range I'm talking about here. It's capped, essentially, if you will, in the 99, 30, 40-ish area. And at the bottom, which we jumped right back off again, notice how solid that support has been, right at the 97, 60-ish area. So any breaks of those areas certainly could bring a further extension, price lifting, if you will. Lifting offers are essentially getting under this point here and starting to hit in the bids, which essentially will more likely bring us back down into this lower zone, which has much more time spent building it out. And from the perspective, at least from market profile or auction market theory, what they call ATM, which I am an expert in, once you break down into that lower zone, oftentimes, if we break down into it, and this is sort of the line of demarcation right here at this 97.40 area, we break back down. Actually, you could probably say it's maybe about a 20 pips zone somewhere in this area. Oftentimes, from a market historical market perspective, it's going to want to test the lower part of the range, right? Now that's a big move from where we currently are. So, and it could take some time, but oftentimes if we get back down and we can't find any reason to sort of levitate any market, it doesn't have to be the dollar. It's more of just understanding chart patterns. We break down into a lower zone. Oftentimes it's going to want to test the lows. See what it's made of. These are actually very, very historically good swing trade areas if we get back down to this and spend some time building a very tight base, right? And you can't really show this with volume, but if this is, your favorite stock or any other type of currency and you start to see volume lifting as that, so let's say a tight pattern builds and then some volume starts to come in, those are essentially buy points where have of it going lower because it's been a number of whatever periods of time basing out, building a bottom, if you will, and then moving into a breakout type of pattern higher. And that's usually accompanied by increasing volume, which really has very little to do with understanding auction market theory perspectives and market profile, which is nothing more than just framing both time and volume in the aggregate, whatever period of time. As little as 30-minute candles, which primarily day traders use, especially for trading the futures markets and indices, or the time frame. So with the profile, I get asked a bunch of questions on it here and there. You can certainly Google my name if you want. Anywhere out in the internet, you'll see just a whole host of presentations that I've brought into this area over the last decade. What else do I want to say? So I did want to make everybody aware that that pattern on the dollar doesn't mean it's going to play out. It could be wrong and something opposite could do, right? Euro, essentially the opposite of what I just described. So if you want to sort of flip it or be uncorrelated or flip it upside down on its head, exact same thing I just illustrated on the dollar, for the most part, is playing out. Lower range we're building attempts to break back up into some previous higher range so far have failed. From a theory perspective, that really only argues for we need to spend more time balancing inside that area. Could mean a lot more, but as far as like not reading too much into the tea leaves, just on the surface. What else? GBP. This one's much lower to the bottom of its range, which is really quite surprising because it's been the complete opposite look. I get it. There's geopolitical skirmishes going on, I understand. But man, this thing just really was just ripping into the beginning of the year. I truly thought that, things were going to take off. But then again, who the hell knew Putin was going to do some stupid things that he continues to do? That throws a monkey wrench into the plan. And I don't even know there's really that defined zones I could even show you. There's just some real sloppy patterns. I'm not sure I want anybody reading anything from that. Not too much guidance for you there. I mean, this is really pretty much the edge before the edge of the cliff in the Canadian dollar. Actually, let me do a refresh on this. It doesn't look right here. We got April 1st. Yeah, okay, I guess that's right. I'll tell you one thing I really wish that TradingView had, and maybe it does, and nobody has shown me how to do it yet. With a lot of my future software, one thing I've always loved about it is I had such rocking data feeds coming in, mostly just DT and IQ feed stuff. For those of you out there who know who that is, just a data provider. But you can always right click, and I could do varying degree levels of what's called data scrub. So it would go back and scrub all the data. And inevitably, especially if you're looking at something as minute as a tick chart, which is obviously 10 zillion times more pieces of data rolling in than a daily chart, it scrubs things out, allows you to see what could be cleaner in terms of, not that it really matters as much for a daily chart, obviously, but it could clean up some of the formations of the candles that may have pieces of data error in them. I think if I could ever get my trading system act together, I could show you guys IRT at some point. But I always hesitate to do that because I try to keep it as simple as possible. And the more we get into this, and the more that we bring on outside advisors and clients, I mean, it's just our presentations to clients have just continued to get simpler and simpler. And ideally, the vast majority of them, they want a financial plan presented to them like they're a fifth grader. And quite frankly, I don't blame them. Same thing with charts. I always hesitate because a lot of people are like, hey, yeah, show your IRT stuff from Linsoft. And I think most people's heads would spin. I know all my partners in the office, their heads spin. They're like, turn that shit off, Steve. We don't know what the hell's going on there. So just tell us what's going on with the S&P. All right. Not going to get too much into the yen. This has just been our whack currency, and whew, a lot of forces at fact here, but it's just pretty much the strongest part the dollar is globally right now is against this currency. Crazy. Swiss stuck in a range. Again, these are daily charts. I did want to show this because there's been pretty close to a possible breakout. I mean, the Australian dollar has been acting well this whole period of time, and it looks like it may want to break. If it does in fact break from this point, this thing's going to run. So be real careful if you're trying to short this, because when you have a lot of dojis with increasing volume, right, you could have just a whack move in this currency. So I'd steer clear of, I don't know. I mean, it seemed to me at this point, barring any thing that comes up from the standpoint of outside forces, if you will, or outside factors, which could totally come in and mess this prognostication of mine up. This looks like it just wants to rip out up. And your indication that maybe a hint of that is brewing is look at this volume here. So this volume precipitated, which I'm assuming is mostly a lot of buying going on because we came right up against it. And essentially what I'm assuming is there probably was larger accumulations going on by whoever, right? We call them other time frame players, right? Doesn't necessarily have to be defined in any more detail than time frame players, meaning people with a lot more money than us. So institutions, sovereign wealth funds, hedge funds, trading, family offices. I mean, there's a whole different types of group, and it doesn't really matter who it is. It could be a huge mutual fund or some ETF that's been loading up in currencies, right? Although those are usually just dialed out by prospectus in terms of what they can buy, like a mutual fund. Who knows? To me, it looks like somebody's accumulating this. So when I see increasing volume and it comes right up and stops, and then we do a little bit of a breakout, there's no way I'm trying to short anything like this, at least from a daily candle perspective, right? And then we have an indecision candle, right? So the shorts essentially are nervous, and here's where the barbecue starts, right here. So usually have a people settling up positions, period of time. It's typically 5 to 10 days on something like this, trading flat, and then there's another rip up. Remember, I always could be wrong. So think of what you would do if you were wrong. That's just kind of how I read this one. CAD JPY. Obviously, this looks like the dollar chart because the yen's been weak, and we in Canada have been strong. Same thing with the euro. There's euro CAD, GBP CAD. Let's hope most of the trades Neo's taken have been short recently. Let's go back to a weekly chart on this one. Take a quick peek. Big area of support, right? Went through it, actually extended another lower support, which we've actually seen much further back. So no surprise this red line would build as well because there was already a big one here. So it built, but now we're underneath that and we're riding the Bollinger Bands down. So my, you know, it's almost like there's, well, I mean, keep in mind, I don't know. I can't say with certainty how much this statement is going to be factually correlated, but I mean, there is sort of an underground boom going on in precious metals, right? Or anything in natural resources. Prices are going up, right? So the fact that if whether it's inflation or, you know, people are moving out of some other asset groups or classes into precious metals, which is typically, along with bonds, a store of value, right? Although you wouldn't know that because the price of bonds are falling. That's strictly just because the markets have run up so much over the last 30 years, and now we have a more than likely a significant period of time in front of us. I hope I'm wrong on that because everything's just going to be more expensive from like a mortgage rate standpoint. But we have a significantly longer period of time in front of us that the Fed is going to be tightening. So remember last Saturday, if you caught my discussion, I talked about an example of, you know, a group of children sitting in a circle, and they have a whole bushel of apples or whatever, a handful of apples, and they're beginning to put them out into the center of the circle and negotiate prices. This is what's kind of been going on a little bit by central banks. But I think the pricing of the bond market's concern is that all the children are going to throw all their apples into the center for sale all at once. That's not good. So if a ton of supply hits the marketplace of anything, what's going to happen to price, right? Simple supply and demand. I think this is a great thing that Florida students, at least in high school, are going to get the opportunity to understand general macroeconomic market forces because it puts a ton of things in perspective. It also can teach you a lot about something as simple as like, well, I got a lot of money. I don't need a car, anything. And I know now that supply is limited in cars, right? Global chip shortage, supply chain. I'm not going to go on and on. Everybody knows this by now. So is it wise to go out and buy a car if you don't need one, right? So just because of the fact you understand something as simple as general market forces in a particular commodity, such as automobiles, you're not going to go out and overpay, right? Save yourself some money. So it does play a part in one's life in terms of understanding just general supply and demand, right? I seem to have belabored this point a lot recently, but it is a core factor in risk management, right? If you're spending less for something, you're putting out less risk. All right, what else? AUD CAD. I think this is probably going to start going back up and flirting with parity. This is something that Credit Suisse Peace talks about as well. So if you're And a parity is just essentially one currency being matched up dollar for dollar another. It's almost like an even. Let's see what else. GBP NZD. Remember what I said about the Widowmaker that this is, in my opinion. Got outside, touched the Bollinger Bands, uh, did slightly happen. See that? Here's where you could say, well, Steve, how'd your pattern work out there, right? Well, was followed by, I should say, increasing volume on the breakout, right? So that make you think, well, I could probably break it, but we got up closer to Bollinger Bands, which has usually been the death knell for stuff like this, right? Was not followed by an outside day. So had this large green candle here, a little easier to see now, been followed by a gap up and run, or essentially another outside day, one time framing higher, as you hear me talk about in AMT theory, right? That really doesn't show you that there's large participation in whatever groups of traders, other OTF guys, they're taking it higher, right? It actually failed, and it failed wildly. So it failed, and then everybody just bailed, right? Oftentimes it'll go back down and test the bottom of the range. Perfect example of that here. What else? Take a look at spot gold. Another example of something just spectacularly failed. Now, in fairness, it goes way outside of a very tight range that had been coiling, right? So it's almost like they went up and blew out the shorts and cleared the queue, if you will, of stop orders sitting up there. Now it's back down inside of range. Here's what the oil chart looks like from a daily perspective. Those trend lines. So those overtly long this, in many cases double long. There's a whole bunch of triple ETFs out there in the energy space as well. You can lever those ones up as well. They don't want this to crack underneath this area. We're probably going to see this previous zone pretty quickly. Keep that in mind, especially if you're making large oil or heating oil purchases, even though the winter's ending. So I can't see why that'd be the case unless you're powering up a moonshine still, right? All right, so in crypto land, actually you can't see, but let me turn on my laser eyes here. In my, hold on for dear lifing friends. We have the Bitcoinage. Let's take a look at the weeklies. Have a lot of noisiness in here, but it's just essentially doing its job, balancing out buyers and sellers, at some point. And the interesting thing is, I'm not sure we have sort of the oomph, if you will, for this to do anything. Well, why is that, Steve? Well, look at the volume averages in here, right? Look at the volume averages now. Would it be a stretch to say we have a quarter of the volume average we had before? Maybe that's a stretch. It's possible, right? Lower volume, lower participation means what? Typically, not as many people interested in something, right? It's like that circle of children with apples, right? Everybody was thrown. Actually, the only analogy you can use to this right here with that circle of children analogy is they weren't they weren't throwing their apples inside the circle. They were beating each other up to steal each other's apples, right? But now, that's sort of settled out, and I guess the question really is where does it head from here? It's a very tough read. More than likely, I'm going to be wrong in this read. Ideally, with this lower volume, I think we see lower prices. The question is when, where. I have no read on that. Although it is doing its job from the perspective of somebody that truly wants to be long, it is doing its job as far as building a base, right? From that standpoint, it can be a bullish thing, although I'd rather see it build its base, which is essentially, if you're looking at the dotted line of my crosshairs, it's like the top of that base is like 45 and the bottom is 34. So from just a long term or any kind of swing or hold on for dear year trading perspective, what I would want to see is that it not crack 35-ish, obviously, which essentially would be your stop. If you're buying around this area, you can actually put your stops something this crazy, probably somewhere in this 33 area, right? Because that's sort of the edge. And I think probably if we were to get down there, you'd probably have just a bunch of just pukers down there, puking big positions out because they thought it was going to get cut in half from that level, which could happen, right? So what if you're taking my advice I always give and you're asking yourself, well, what if Steve's wrong? Well, take a look at this on the upside. We've put in a pretty decent base. This doesn't look like a good base in terms of its sloppiness. It's hard to read a lot in this noise, but this is a type of investment that is plagued by many things that are completely without of the control of the investor, right? So if you are an investor in oil, right, in most cases, with the exception of, a meteor hitting up the planet, or some sort of large explosion in an offshore refinery, or some sort of changes in policy or a war. But I mean, with known events, you can generally do a decent price in researching where it could be. With cryptocurrencies, it's the Wild West, right? It's like the old days. You think you got the covered wagon, and you got your whole team of covered wagons, and everybody's trekking out west to find gold, which drug a lot of people out here. I should say out here. That's funny. I actually live in Florida now, but drug a lot of people out into Florida, out to California, and many other states. They thought they had it all together, and then a band of whoever came in and shot them all up and took their stuff. Right. That's kind of how I look at the currency, or not the sometimes the currency, but that's how I look at the crypto markets. So sometimes the currency markets as well. All right, I think I'm gonna be laboring the point here. So that's my read on that. I could be wrong, and I'll post this in Telegram, and make sure you guys spread the word. I don't think I have quite the followers I used to have, an absolute mass load of followers, and then we sort of abandoned the Telegram platform, which has made sort of a storming comeback, especially in politics these days, as a new platform that is sort of unmessed with. So kudos to the Telegram guys. So follow me on Telegram. I'll post the Credit Suisse stuff. If you guys got any questions, ping me up. Have a great weekend. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.